Welcome. Good to see everyone. And there is the topic for the day is news and price. So perfect opportunity with the actual news we're having today. I know people will typically watch these recordings a little bit later, so the news will be different for many of you by the time you watch this recording. But today, in real time, we have some big news going on around the world, and the equity index markets are down quite a bit. The Nasdaq is down over 100 points as we speak, and obviously the Dow is down hundreds of points, and it's all because of some news that the world perceives as negative. Now, I was thinking, let's dive right into the markets, but given where the market prices are and where our key supply demand zones are, I thought let's instead start do the beginning of this session with the lesson, and the lesson is news and price. Does that work? Does that make sense? And we'll quickly get into the live markets. So let's learn, and then we will apply what we're learning. So to start things off, again, the strategy that we use here is a strategy I developed many years ago on the trading floor of the Chicago Mercantile Exchange, where I started on the professional side of the business, and it's all around supply and demand. Right? We apply a simple rule-based strategy that helps us understand where supply and demand is in the market, significant supply and demand. Where are banks buying and selling so we can also, period. Now, how does all this work with news? Well, once I developed the strategy, I was able to develop some other things off it. So what are the things you need to understand? And I'm assuming you can see the screen here. Any and all influences on price are reflected in price. So what does that mean? Well, there are many so-called influences, right? People talking on TV and news and reports. Today we have China news, and there's some battleships on their way to the Middle East and all that. So all kinds of stuff going on. But what you have to understand is all of this stuff, earnings reports, balance sheets, you name it, GDP, FOMC, ECB, any of this stuff, keep in mind that everyone around the world, professional, non-professional, has different thoughts and perceptions around that specific news piece. Okay. Those thoughts and perceptions end up as one of three things: a buy, a sell, or nothing. Now, the nothing we don't care about, but the buy or the sell we do, and that buy or sell is always going to end up as a footprint on the price chart, a red or green candle, if you look at candlesticks, for example. Does that make sense? So instead of focusing so much of our time on the actual news, the economic report, this or that, thinking about that stuff and all the thoughts and perceptions we have around that are all essentially to answer two questions. Where is price going to turn, and where's it going to go? So instead of focusing on all this stuff, what I choose to do is just go right to the question. Forget all that other stuff. Just go right to the question. Where's price going to turn, and where's it going to go? And when we do that, things become a lot easier and make a lot of sense, and you'll see how this goes. So we want to be buyers at demand and sellers at supply. But the way news and price work, they're obviously inversely related. If we look on the left, some bad news comes out like today, right? Okay. We had the China news and all the other and the warships and all that. Some bad news comes out. People want to sell. Supply drives price lower to price levels with enough demand to meet all the supply. Okay. Eventually, the last news-driven seller sells at a price level where demand greatly exceeds supply, and that's a market bottom and prices go up. Let's go right to the live charts. So if any of you were in my morning trading session today, last week and this morning, we went over this demand zone in the S&P. Okay, way down here. So you could see in real time price. So the market closed, way up here last week. Okay, and that's at 2950 in the S&P. Then we had really bad news, right? The world perceived the news as really bad. All that supply coming into the market drove price down to a price level where there was enough demand to fill all that supply. Does everybody understand that? All the sell orders coming in from Friday's close to through the news events and to today's open, for example, or this morning's open, all right, price just keeps going down because there's not enough demand to stop it. You have to fill all those orders. Well, we knew where those orders were because of the demand zone below, or where they were likely to be. The chart was telling us based on our strategy that demand exceeded supply down here. So price came down to that level. The last seller sells. Now you can fill all those orders. The last seller sells at a price level where demand exceeds supply, and then price goes higher, moves higher because it has to. The news was very real. The news is negative, but that, but we want to be, that's how prices turn because everybody sells down here at demand, and then price has to go up. That's how it works. Okay. So that's kind of a real-time example of what's happening here, and then just vice versa on the sell side. Remember, to answer the questions, the only two questions that matter, whether you're trading stocks, futures, Forex, options, real estate, bonds, cryptocurrency, anything. The two questions that matter are where's price going to turn and where's it going to go. Our job, right, and that's why I share the strategy with you that shows you where those levels are, all right? So on a price chart, we have to, determine where those levels are. So we follow simple rules, and when price gets to an area where supply exceeds demand up here, we sell. Down here where demand exceeds supply, we buy. In the middle, we do nothing. This is the profit zone. Okay. To answer the questions, price turns at supply, it turns at demand, and moves through the middle or the white space. Okay. Now, when we attach a news meter to this, this is what we do. And so, I deliver a morning trading session, and we go over this, right? This is we just follow simple rules. We have some major news, regular, news events, economic data that happen. And I've put some of those in the middle here. There's certainly more. The ones in yellow are the big ones. Okay. Now, when these numbers or news events, economic reports come out as expected, not a big deal. Nothing happens. When the actual result is close to the forecasted result, not a big deal to us. However, when the actual, let's go to the bottom now, is much less than the forecast, or today there's some really negative news that's beyond the norm, what does that do? That drives price down to demand, right? So negative news, the more negative, the greater the buying opportunity at demand. Does that make sense to everyone? Right? Does that make sense? Now, what we do is when numbers come out or economic reports come out or anything in the sessions, I'll typically move like if the ECB or let's say FOMC, something comes out much better than expected, I'll pull the actual FOMC and I'll put it up here for our group. So they know that, yes, news is great. We want to be sellers because price is into supply. So we've had many examples of this over the years, and these are all live sessions that I've done. Some of you may have been in these sessions. Okay, some of you may have been in them. Here's 2009. I don't know if any of you were in my session in 2009. This is March 2009. Some of the worst economic news in history, at least in my lifetime. And that brought prices down. There's a screenshot of the live session where price came down into a fresh demand zone. Okay, so the news was very real and very bad over here on the news meter. The trading opportunity was equally outstanding on the buy side. Make sense? Here's one of our members that bought down there, that shared their statement with us. Warren Buffett also bought down there back in March 2009. And I'm going to go through this stuff, some of this stuff fairly quickly, but I think you'll get the point. Moving forward, okay, couple years later, we had the big, the horrible event in Japan, right, with the tsunami and the nuclear reactor, whatever it was doing, not good. People losing their lives, horrible event, real event. Okay, so I was asked to comment on an article here, and I did, just saying, look, unfortunately, how markets work, the worse the news event, the more sellers are going to come into that market, which ultimately drives price down to price levels where demand exceeds supply, where you want to be a buyer. And this is exactly what happened here again. On our news meter, really negative news, which means equally, fantastic trading opportunity. Okay. And of course, price went up quite a bit after that one as well. Same thing can happen on the short side, right? Again, about another year after that, we had some fantastic earnings in an uptrend in the S&P, biggest equity index market in the world. News could not have been better. I guess it could have been a little better, but it was outstanding. The whole world is buying here. However, who is selling? Who has an account size to cause a supply level like that in the largest equity index market in the world, right? Banks and institutions selling, retail traders and investors on the buy side here. News is fantastic on our news meter, which means we want to be sellers on the trading side, right? And again, price fell significantly for that level. This one's not that long ago. Netflix, outstanding earnings, okay? On the news meter, this could not have been better. They blew out earnings. However, that brought prices up to a supply zone that we had in our trading session here, and where we'd want to be a seller. So that news came out. It was outstanding. Prices in Netflix gapped up to $400 a share, quickly fell to about $260. News meter was great. Trading opportunity equally great. Okay, and on and on and on. I could show you tons and tons of examples about this, but I think you get the point. Okay, so let's go to our price charts now. Does that make sense to everybody? Right, and that's why you're seeing prices trade, prices so bullish this morning off of our demand zone. Strong negative news brings in lots of supply, drives prices all the way down to whatever price point those sell orders can start to be filled. That's always going to be at our demand zones, right? Okay. Because remember, when we're learning supply and demand and identifying those levels, there's supply and demand levels all over the place. We don't care about that. What we care about is our significant supply demand levels, price levels where you have all, big banks and financial institutions are buying and selling. Any questions on that? All right. So again, it's not that the news isn't real. It's very real, and people are very, really reacting off of it, to it, and that's why. Because some people scratch their heads like, wait a second. Yeah, I'm just reading back in the chat. They'll say, wait a second, why is price shooting up with all that bad news? That's why, because everybody sold. You don't have any more sellers, and you're at a price point where you have tons of demand, unfilled buy orders. Remember, for those that have, for the basic sessions, right? Unfilled orders cause prices to turn. Filled orders facilitate price movement. We'll look at the pound in just a little bit, Norman. That one, we've had some great levels in there. Okay, let's keep going. So that is the, and look, as we go forward now, I can look at any market you want me to look at. So if you have a market you want to look at, does everybody get the point, the whole kind of news and price? I would sum it up by saying this. News and price, and I've been at this a long time, is an absolutely perfect relationship that most people completely think backwards, right? Most people think it completely backwards. Another one of the many reasons why very few people, do well at this, and those that do very well. Sure, we can look at the 10-year note. This morning in the live session I did this morning earlier, we looked at the 10-year, and what we said was, you'll see the supply demand levels we have here. So here is our 10-year chart we were focused on. So we're looking at a 4-hour chart. A lot of members in the session have been long from this demand zone below. But we looked at this and said, okay, price is just sitting in the middle here. Another reason why it was the demand zone in the S&P and NASDAQ and all those is working out so well is because if that news was really, that big of a deal, you wouldn't see the 10-year opening up right in the middle here. Okay, meaning, so everybody look at this. Here's supply, here's demand, and see all this trading activity in the middle, which is where the 10 years has spent most of its time. That equates to this, right? This right here. Here's supply, here's demand, here's the middle. Okay. So that kind of told us, look, don't worry about the news too much. Prices at demand, okay to buy. Going forward, where's the 10-year likely to go and turn? Well, it's in the middle. You don't want to make predictive bets when price is in the middle. Not ideal to risk your hard-earned money when price is in the middle. If we down here at demand is below 122.30 is where we want to be a buyer, and just above 124.13, this area is where we want to be a seller. In the middle, no reason to put your hard-earned money at risk because the odds of being right are going to go way down. I see someone's talking about the British pound. Why don't we go right to the British pound, because there are some opportunities I know we've been looking at. So if you've been in my sessions, the chart we've been looking at for the last couple of years has been this weekly chart of the pound, where we have supply above and demand below. Price is not in the middle, but it's it is coming off the supply zone. On smaller time frames, we recently shot right up on some news last week into these two supply zones that are sitting on top of each other. The upper one is still good. The lower one is not. So if I don't know if some of you are in my sessions, but if you took this one, great. But going forward, I wouldn't take that lower level again. I would focus on the upper one, and we could short another rally up into that. There is quite a bit more profit zone to the downside, though, here if you're short. If you're not in a position, again, now's not the time to get into that. You're better off waiting for a new high into that upper supply zone, or let prices come way down away from supply to be a buyer at demand. Make sense? Any other markets you want to take a look at? If not, I have a whole list here. That we can look at. Okay, and why don't I stick to some FX markets here? Let's go over to the yen next. So that's the dollar yen spot market, and we'll start with the daily chart. So we have a new level that just developed. So in our so again, another level from our sessions here. So we have two supply zones. Obviously, we're far from the upper one. This one just developed the other day, and literally in 2 days, price fell from the level, came back to the level, and now we're obviously down. But one thing about this 111.50, call it 111.55. We would still consider that a level that's worth taking. It's technically not a fresh level, but because price touched the supply zone and fell, that's like our secondary evidence telling us that there's a big supply-demand imbalance up there. Does that make sense? Okay. So watch for that. And then, of course, nice big profit zone to the downside. Yeah, we don't have any. There's a couple demand zones below that are not fresh. But there you go. Any other markets you want to take a look at? If not, I'll keep going down my list. And we can go to the euro. And I'll switch it up between the futures and the spot. Oil, yep, we could look at oil too. Okay. Okay. So, okay. So, well, first of all, actually, before the euro, let's go to the dollar. The dollar, so we've got two things going on in the dollar. We have this demand zone here that just developed over the last 3 days, actually the last 5 days. It's developed and price came back level. Now it's slowly rallying off that area. What's holding it down from moving up to the 99 area, remember last time we were together, was back in here. The goal was, we were saying in our last session was we're probably going to see $1.99 pretty soon. And it's on its way there. Got up to 98 and change, but we do have a supply zone that is capping, you know, capping gains in the dollar. So just be aware of that. It's not fresh anymore, but just above that area, we have another level sitting there. So those are the things that are getting in the way of the dollar moving to 99. But as I just showed you, there are some, big demand levels below. So that's probably going to continue to just churn its way higher to that area. That's what's been happening off this weekly time frame, right? From here, the move is, we're expecting is up to, 99. So we're not too far. Having said all that, for those that are short the euro from our last session, from this daily supply zone, anybody in our group here still short the euro? Remember the plan here was to play for, the euro short plan was all around dollar to 99, and the fact that, the euro just doesn't have a lot of demand close. Okay. Here's oil. Let's take a look at oil. So let's start with a larger time frame oil. Here's our, for those who been in the sessions for the last year, we just moved from supply all the way down to our daily demand down here, and now we're kind of halfway back up. But let's move to this time frame over here. I don't know if anyone's still holding on to the short oil position. This is from one of our FX Street sessions up here, but there is still room below, and especially when we go down to our 60-minute chart. Again, this supply zone at 63.80, we would take that again, but we would probably take it at 63.85. That's where the still likely to be some supply at 63.85. There is a level a little bit closer to current price. Sounds like there's some background noise there. It's not coming from me, so I'm not sure what it is. So in oil, probably two of the most important levels to focus on. 62.50 up to 62.75, and then there's another supply zone on top of it. See that? Okay. I don't know if anybody else is hearing the background noise, but again, 62, you can call it 62.55 all the way up to 75, and then these two levels go up to about 63.15. Okay. So you have multiple levels sitting on top of each other. If and when oil gets up there, likely to turn lower and move all the way back down through the profit zone. Okay. Check here on that background noise to see where it's coming from. I don't think it's coming from me, but. Yep, there we go. Now it's gone. Okay. Nope. Now it's music. Someone's playing music in the background. I'm not sure where that's coming from. Anyway, so that's oil. If you have any questions on that, and again, all we're doing is focusing on answering those questions, right? Where are banks buying and where are banks selling, so we can too. And the chart is suggesting that these levels up here are key, not the 50, I'm sorry, this one right here. Okay, 62.55 to 62.75, and then okay. Okay, there we go. Is that a little better? I don't hear that background anymore. Okay, so again, if you have any markets you want to look at, just let me know. Otherwise, I can keep going through my list here. So that's oil. Market we focus on a lot is obviously any of these Forex markets, you want to make sure that you're, you know where the dollar index supply and demand levels are, right? We always want to tie those decisions together. When we look at the Aussie dollar futures, let's do that here. There's a 4-hour level that we were dealing with last week. It's no longer a level because price went really deep into it. So nothing really to do there in the Aussie dollar. But we do have a 60-minute supply zone I want to share with you, unless this level's, oh yeah, that's too far, never mind. Different market, hang on. I wanted to share a different one with you. I'm just looking at my notes here, and I can't remember which one. Yeah, we can definitely look at the Russell. I spent quite a bit of time on that this morning, but let's do it here. Okay. And so this is a level that we had last week going into, you know, Thursday, Friday. Notice the two supply zones here on top of each other. We had our stop up there. Okay, the red line is our stop. Friday, price rallied all the way up and closed right into our area, but well below our stop. And the opportunity here was to take a short position for a move down. Well, we got that. But notice I have the white space here. So one of the things I try to do in the morning live trading sessions with the group is clearly identify, answer those two questions, meaning where is price going to turn? Well, price turns at our supply here and demand levels. Where's price going to turn and where's it going to go? For the second part of the question, where's it going to go? That's where we identify the white space. Right? So remember, like I've said, unfilled orders cause prices to turn, our supply and demand levels. Filled orders facilitate price movement. That's all the middle, right? The orders in the all those orders. So that's this. Does everybody understand why this picture here represents filled orders? Does everybody understand that? Filled orders? In other words, all of this trading activity here tells us that there can't be any significant unfilled orders in this price range. So when price hits supply, it's likely to fall down through this area pretty quickly. They can just as easily go back up again. Now, why is the Russell turning here? Well, it's not as clear in the Russell, but in the S&P, I can go to this chart right here. I'm sorry, this one. Okay, you could, the Russell stopped falling and turn higher because the S&P had demand here, the Russell had demand here, the Nasdaq had demand here. They're all in the same area. Okay, make sense? So what do we do with the Russell now? Where does the Russell go now? Well, let's look at some new levels. Again, today's a tricky session because moves that were very predictable that we set up and plan, they're all underway. So new levels and new moves, price needs to move quite a bit more to get there. For the Russell, the key chart you want to focus on is the 4-hour chart. When we do that, you can see there's our fresh supply and demand levels above and below current price. The Russell has to rally up to 1647 on the supply side, and on the demand side, there's a lot of room below, right? All the way down to, below 1450. So we're far from that at the moment. In between there's going to be smaller time frame levels, sure, but not the type of areas that we care about, right? You want to focus on high probability, low risk, high reward, and all that. So let's continue to look at the Russell. I know people are asking for that. In the big picture, the Russell has been sitting, either just below our supply zone, this is a larger time frame, or just above, at or above our demand zone. And it's just moving, quickly from one to the other. Going forward, we have to go to our, so we have a demand zone here at 1545. It's right here. Okay, so 1545. I know we're well above that at the moment, but that's okay. That's the next area where we'd be, aggressive buyers at demand. Now, to make sure you understand this, look at the demand zone that we have in here, and then look at this demand zone right here. Just want to put a little circle around this so you can see this. What's the difference in these two demand zones? Because I would argue that this one I'm putting a circle around right now, structure-wise, looks like a perfect level. But what's the big difference? Why would we not be excited about buying at that upper demand zone, yet be very excited about buying at the lower demand zone when the structure of the upper demand zone is cleaner, it's nicer, it looks better, it scores, Any thoughts on that? Well, if you look at the key is to look to the left. If you look to the left of the upper demand zone, look at all that trading in here. See that? All this white space. Let me ask you, does this trading opportunity here, I'm sorry, trading activity just to the left of the demand zone that I'm circling, does this trading activity represent filled orders or unfilled orders? What does that represent? All the trading activity just to the left of the upper demand zone. Yeah, it represents filled orders. Filled orders don't cause prices to turn. Filled orders facilitate price movement. So even though you'll see a demand zone here like that, and structure-wise it looks perfect, its location is terrible. Yes, there's a supply-demand imbalance there. Obviously, demand exceeded supply. That's why prices couldn't stay there and moved higher. But it's likely not a significant amount of demand. And that's because of all the information to the left. Okay? All right. Let's keep going. Yeah, a stock that we were watching. I don't think it's obviously it's going to be moving in the wrong direction. We're looking at Boeing. I was looking to be able to get Boeing somewhere down here, somewhere much closer to 352. Right now it's at 370. So Boeing closer to 352 is ideal, but not up here. Most of the stocks today are bouncing back nicely, as they should. Okay. And yeah, same thing with the NASDAQ. Not really moving, and we're far now from our supply and demand zones. Okay. Oh, that's another equity index market. Okay. Any questions or comments on any of this? I'm going to I put my email address in the chat. So in case you've had my email, it's different now. It's sam.seiden@tradingacademy.com. So sam.seiden@tradingacademy.com. If you want to email me anything on, if you're struggling or strategy type questions, supply demand type stuff, you can always just send me an email. Let me know you're from FX Street. So remember that. That makes sense? All right. So I know we're just about out of time here, and but I want to make sure that we got that simple yet important lesson out and that we applied it to the live markets. Okay. So I think we went over a variety of markets, some equity index markets, some bonds, some FX, and gold and oil. All right. So I'll deal with this background noise issue. It's quite loud, but I'll deal with it. And we'll see you soon. All right. So thanks. Have a great day.